All right, guys, bang, bang. I have the man, the myth, the legend himself. What's going on, Jon?
I love the bang, bang, man. That's my thing too.
Just for the record, Jon's the first person to ever start the podcast off with finger guns. We're already into the finger guns. We're ready to rock and roll.
Bang, 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 bang.
So for like the one person watching this who doesn't know who you are, never seen you on television, let's go through your background, kind of where'd you grow up and what did you do before you got into financial markets?
Sure. Pomp, I grew up in the Bay Area, San Francisco, lived there till I was 12, loved it. We used to go down to Haight-Ashbury and drive around and check out the freaks, as we used to call them. That was before I became politically correct. Now I would just call them hippies. But we always had a good time. And, you know, it was never a heckling thing or anything else. We would just, my dad's a doctor, and so that's where I took my nickname from, Dr. J, from my dad, more or less to honor him. But when he was a surgeon in San Francisco and an assistant chief of surgery there, he would have people fly in from all over the world to learn various surgical techniques, because he was one of the first people to successfully do liver transplants, pancreas transplants, things like that. So he would teach people from all over the world. And since San Francisco and Haight-Ashbury was kind of top of mind for a lot of people, they'd say, hey, can we go down and see the hippies? So my dad would say, boys, get in the car. We're going down, but make sure you roll up the windows because those guys have lice. But so we would drive down to Haight-Ashbury, and you know, it would look exactly like you think it would look. A bunch of wonderful Victorian homes, lots of men and women with long hair, big glasses, day or night, you know, big sunglasses, and you know, monster bell-bottom jeans and things like that. Exactly what you think it would look like, that is what it looked like. And San Francisco, you know, the city by the bay, I loved it. I went back there briefly to Berkeley for school, to the University of California, because we moved when I was 12, Pomp, to Minneapolis. My dad took a job as chief of surgery at the University of Minnesota. So we moved to Minneapolis. Loved that because there was snow and season changes. San Francisco, it's pretty much the same year round. It's, you know, it's cold and foggy in the morning, and then it gets cold and foggy again in the evening, but in between it could be sunny or rainy. And it was just a fun city. I loved growing up there. And then when we went to Minnesota, like I say, we had very harsh changes in the season, from fall to all of a sudden 60 below, you know, a month later. So the season change was a big deal, but that was also fun. And I got to go to, high school with Prince and a bunch of these famous musicians. They weren't famous in high school. They were just interesting fellows, because I got bussed into a mostly black high school. So I went from Lily White, San Francisco, Lily White junior high school, to all of a sudden being bussed into an all black high school. And it was a little, not scary, but you know, you were always on edge. So I bet I know how a lot of African Americans or blacks feel when they go to an all white high school. You know, they probably are on edge too. But some of my greatest friends and friendships were made, you know, from that. And back then, yeah, we had gangs, but the gangs didn't shoot you, Pomp. You know, the gangs, worst case scenario, a gang would beat you up. Now, you didn't want that, but, you know, I played football, so all the guys on the team were my friends, but they weren't going to walk me home every day. So I had to frequently run from the football, you know, from showering up after football practice, kind of looking both ways and making a dash to get to a safer neighborhood, because if I got caught in the wrong neighborhood, again, I think it builds kind of a um, empathy for somebody who would be the opposite. Like I say, for an African American or Asian kid that was in an all white school where they didn't feel so comfortable walking through that neighborhood either. But like I say, it ended up working out great. I have enjoyed both the friendships and the experience of not being in the high school that I thought I would have been in.
Yeah, that's awesome. And then what did you guys do for college? Because you have a twin brother, correct? You guys are twins?
No.
No.
See, everybody thinks that though. And not everybody, but a lot of people say, oh, you must be twins. Nope, 6 years apart.
Really?
Yep. Pete is the youngest of 4 boys. I am the oldest. So I'm 6 years older than Pete, 4 years older than Paul, and 2 years older than Dave.
So you don't know this, but I am the oldest of 5 boys. I am 8 years older than the youngest, and everyone in between is 2 years apart. So very similar. We just have one more than you do. What are the 2 brothers in the middle doing?
One brother, David, he sold a bunch of fast food franchises that he started with my brother, Paul. And now he runs a health club that he owns. He owns this big building, that's got a health club. So that's been challenging, of course, during COVID, because by law they had to stay shuttered. And he has several ice cream parlors, and he kills it with the ice cream. He's only open in the summer, but he absolutely kills it. They're scooping out these gigantic, scoops of ice cream, and people come from all over the city to his ice cream shops because they overserve so much. And the other one, sadly, Pomp, passed away of ALS. So that was really a crappy thing. My brother Paul passed away now 5 years ago of ALS.
Got it. Sorry to hear that. And why did
life?
Yeah, absolutely. And why did you and the youngest, why the kind of bookends, if you will, want to go into the financial markets, whereas your other brothers went more into entrepreneurship?
Well, I did it because I was playing football for the Bears, and that's what brought me to Chicago. I was not a high draft choice or anything like that. I was a free agent, which meant that just for the folks that don't know, if you're not drafted, you can go to any team that offers you a contract. So I had 3 teams that offered me a serious contract, discussions with a couple other teams. I ended up picking the Bears because I thought, you know what? They have a really crappy team. No, but think about it. It's just like, do you want to, if you're going to join and try to beat somebody out for a job, do you want to go to Apple where everybody's a killer, where all those engineers are killers? Or do you want to go to a shitty place where you might be as good as any of the engineers they have? That was how I did it, Pomp, with weighing, do I want to be do I want to try to play for New England, where they're Super Bowl champ kind of things, or do I want to go to a team where they haven't been anywhere forever, they suck, and the linebackers aren't that good? That was my position, linebacker. And that's, both cockiness on my part, me thinking, oh, I'm better than those professionals, which I wasn't. But I do think that you'd want to pick a place where you think you might be able to make the team. If you're drafted, you don't get that choice. You just, you go. And if you're a high round draft pick, you're going to make it. Nobody cuts their first round pick until the second year or third year. But, as far as free agent, it was great. Brought me to Chicago. So when I learned the ropes, my brother Pete, who was, like I say, 6 years younger, he was still in high school. So, because I came right after college, he's still in high school. He's deciding where he's going to go play college football. And after he was an All-American and a big star at University of Minnesota, he went down and he played for Seattle, the Seahawks. Then he played for the Vikings. Then he played for Tampa Bay. Then he played for the Raiders. And each time in the offseason, he'd come and visit me here in Chicago. And he'd always say, God, it really has a cool energy, a cool vibe down here on the floor. And I said, yeah, it does. That's why I love it. That's why, 3,000 men and women on the floor, that's why they love it. But it's also, I'm sure you see this all the time. There are probably people who are so into blockchain and crypto or digital assets, but they're into it because they want to make a lot of money. You're into it because you can make money, but also you're into it because you love it. There are probably every year, give or take, 700 to 1,000 people that leave the floor. And they don't leave because they retired with a big pile of money. They left because they couldn't hack it. They couldn't make it. So that churn just stays there all the time. So of the 3,000 people, 2,000 of them are probably happy and 1,000 of them are probably churning and leaving and coming back and, trying to get refunded and all that stuff. So, if you are somebody who finds that fun and exciting and, that's why Pomp, I'm always pumping my fist on TV or, shooting the guns or whatever, bang, bang, because, I enjoy what I do. And I know you do because, we've talked and I've seen the people that, come to your events and things like that. The people that just love, they actually love the idea, not just the idea of getting rich. The idea of getting rich, that's really an easy sell. But it's a little harder to get excited about actually doing this every day and making this, your vocation.
Yeah, it's one of these weird things where when you talk to people who seem to be successful and you ask them, why do you do what you do? Majority of the people I've talked to will answer some form or fashion of, I enjoy the process of this, right? The product or kind of the end result takes care of itself, right? It's kind of a football way of thinking of like, hey, look, we got to do every single play. And as long as everyone does their job, every offensive play is drawn up to be a touchdown. And every defensive play is drawn up to stop them for a loss, right? And it really just comes down to kind of the process and execution, all this kind of stuff. And so it feels like that people who end up being successful, they enjoy that process. And it's the process or kind of showing up every single day for year after year after year. That's what ultimately leads them to the success. And to your point, the people who either don't enjoy it, can't, hack it or whatever it is, they're the ones who kind of wash out and go find other things to do in life, right?
Yep, that's exactly right. And you can't really... Some people will kind of sell their soul to be an investment banker or, some other job in finance that their heart isn't really in it. And they do it for a couple of years. Maybe they make just enough, but they're always looking for a way out. And I was never looking for a way out. I was looking to stay in as long as I could. But, the game changes. And, every financial edge that people think they have goes away eventually. And you have to develop something new. That doesn't mean you can't own, Bitcoin or Ethereum or Microsoft or Apple forever. You could, but if you're trying to make a living day by day trading in and out, and all of a sudden computer algorithms are taking all the edge away, it's a little tougher.
For sure. So when you ended up deciding to leave the NFL, what did you do at first? Did you go right to the trading pits or kind of what was that journey like? And what was kind of the impetus for going into that environment?
Sure. It is a very good question because I didn't leave of my own volition. They fired me. They cut me. And, it was one of those deals, Pomp, where literally they come to your door, knock on the door and say, I know I'm going to get cut tomorrow. I know I'm going to get cut. And they'd leave because they couldn't face that. When it happened to me, I was pretty sure that I was going to be cut, but I was still in enough of denial, the river in Egypt, where I thought, well, a couple of these other guys left. Maybe they need an extra linebacker to hang around before Singletary. What if he hurts himself or whatever? He never did. The guy was like unstoppable. And that's the guy that beat me out, Mike Singletary. So he did a great job. He was very good guy too. So it would be easy to hate the guy that, that takes the job from you. But this guy was just such a good guy. You couldn't hate him. And I've always been a guy also that's pretty honest with myself as far as my abilities. So when I meet somebody who is better than me, could be in trading. I've met guys that are better than me. It could be in skiing. And it happened to be in football, and I was just like, yeah, I get it. He's better than me. And the coach was like, yeah, we're sorry. Not everybody can make it. You know how it is, Jon, blah, blah, blah. And I'm like, hey, man, I appreciate the opportunity. Thank you.
Yeah, that's awesome. And I mean, look, to be completely frank, right? Playing linebacker for the Chicago Bears, no matter how long it was, is one, amazing, and then two, to hang out and meet with guys like Mike Singletary and kind of all of the players that went through that organization is obviously a life experience that a lot of people won't have, right?
Yeah, I agree. And luckily, I had one bad injury in high school and nothing after that. So, I've seen guys with their shoulders cut, their knees cut, their hands. My brother Pete has broken every finger at least once and his thumbs twice. So, yeah, there's a lot of injuries and things that guys get that I luckily avoided.
Yeah, that's awesome. And so help me understand as you decide, okay, I'm going to go kind of and build a career in finance and trading. Did you already know people and kind of have a backup plan? Was it like, okay, I got cut and now all of a sudden I got to go figure this out? Like what happened kind of post getting cut from the NFL that eventually launched the career in finance?
Again, that's a great question because since my dad was a doctor and he was pretty famous, I mean, in his field, he was, like at, if not the zenith, right up there on the top of the mountain. He developed a bunch of anti-rejection drugs for people when they got transplants and things like that. So he was very famous, and he's the chief of surgery at the University of Minnesota for like 38 years. So the choices were I could go up there, but I could stay there, but I'd always be in his shadow, I thought. And no shame in that, but I wanted to kind of forge my own path. And so my agent was putting some of his representative players, because he had hockey players, skiers, baseball players, that kind of stuff. I mean, famous people like Rod Carew and Alan Page, they were his clients. So he was putting some of those guys on the trading floor because they had what he thought was necessary to be successful in trading. They were disciplined. They were excitable. They were physical. And he thought those kinds of things would make you a good trader. Now, he knew, of course, you needed to learn all the other stuff too. But if you didn't have those things, some people were putting like professional blackjack players on the floor. Because if you can count cards, you can be a pretty good trader. And I agree, that's a good skill. I knew a guy that could count 3 decks of cards and beat you on virtually every hand. And he was banned. He had to, when he'd go to Vegas or Reno, he'd have to go in a wig and things like that. I mean, he was kicked out of more casinos, but he was not good in the pit, even though he was a good trader, because he wasn't aggressive enough. And so, like I say, my agent was looking for guys that were aggressive, that could learn the other stuff. Some of these guys were like professional chess players, grandmasters in chess. And you might imagine that you and I probably know guys, Pomp, that are like that. they tend not to be terribly aggressive. It's all up here. And so they'd put on a position and they'd walk away. And, hopefully they put on enough edge that they could make money from putting that position on. But they couldn't stand down there in the pit and grind it out like the rest of us could, because they weren't aggressive enough. It's a physical, back then anyway, it was very physical. You couldn't hit people, but you could throw elbows and things like that. People didn't want you standing in their spot. So being bigger, I'm still about 6'2" and 215. Back then I was 6'2", maybe 250. So I was a bigger guy, broader shoulders and things. So you could intimidate people. And that was very valuable in the pit.
And Jon, explain that a little bit more, because there's a lot of people listening who have no idea how the pits worked, especially back then. And when you're talking about it being more physical and kind of the jockeying for positions and things like that, like unpack that a little bit and explain what was happening.
Sure. Well, so you're in the trading pit, and a pit is an octagon, just like, the UFC fights in, except they have steps that go up, usually like 3 or 4 feet in the air. Each step is, let's say, 6 or 8 inches. So there might be 4 steps up, 4 steps down into the middle of the pit. And each ring, if you will, of that pit is about 18 inches wide. So you could stand on that, but it's not exactly like standing on a 2x4. There's enough room that you can kind of walk around on it, but you could also fall off of it. And, so sometimes when traders were standing in their spot, if all of a sudden a trade was happening on the other side of the pit, everybody would rush towards that side of the pit. Sold, 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 sold. And they're stumbling down the steps and things as they go over to that side of the pit. So the pits are set up so that from the top ring of the pit, you can see all the trading desks around the floor. If you're down in the middle of the pit, you can't even see out of the pit. You're just looking at guys' bellies and things like that. So the more active trader you are, you're at the top. And the less active you are, or the newer you are, you're down at the bottom. So the guys at the bottom tended to hold positions for a long time. The guys that want to buy, sell all day long, they're at the top. And the brokers want to stand next to the guy that's actively trading, because by rule, they can't trade against their own paper. So if I have an order from a customer, I'm calling that paper, I cannot take the other side of this trade. I have to open outcry it into the pit and say, 55 calls. And the pit screams back, 1 to a quarter. And I can say, I'll pay 115. And then they might say, at a quarter, at a quarter, at a quarter. And then if I can't buy them at 115 and the order is not held, meaning I can pay any price I want, I might say, 100 and 100. I bought 200. I'm out. I'm 115 bid for 200 more, or whatever. So that trade would happen with those two guys. They'd all write each other's names down on the card rather. The sellers would write down who they sold to. The buyer would write who he bought from, and then they'd turn in their cards. So all of this got processed at the end of the day when I started. Then, as trading became faster and faster and faster, it eventually moved to handheld computers. Then it moved to, at almost light speed, to laptops. And then you don't need traders on the floor anymore. Now you can make that market pump from New York or from Philly or from Macau. It doesn't matter. So you don't need to be in the pits anymore. So the pits went from very profitable places to be, where, if there's 3,000 traders down there, they might be taking a couple $1 billion home every year. And all of a sudden, most of that gets taken by high frequency guys. And now the traders on the floor these days, if you're still on the floor, maybe you make $150,000 instead of a couple million or 10 million, whatever you could make before, and you multiply that times, 2 or 3,000. So you get where, the big change came from. Now there's almost no one on trading floors. It's all by machine.
Yeah, and it's always struck me, like the New York Stock Exchange floor, for example, there's still some people walking around. You look at the old school photos compared to today, and it's night and day difference. It almost feels like the people actually on the floor are almost there as more of a ceremonies type thing, right? Where it just feels like we got to have somebody there. We can't just have servers all over the floor. So I don't know, we'll put 50 people out there. But what are they actually doing? Right? Are they literally there for more of a ceremonious thing, and they just it's their personal preference to be on the floor and kind of just use their computer from the floor, or is there some purpose other than that?
Well, like the New York Stock Exchange, they have kept a couple of carve-outs for the traders on the floor. They see certain information, like the end of the day when they say, well, on balance, there's 2 billion to buy or whatever. They see that first. They know it before anybody else. Now, most of them are filling paper, meaning that they're brokers. They're not traders. And that's no disrespect, but that's just what it is. They're not trading. They are brokers. They're filling paper. So they're offering insights and best, I'm going to try to get you the best price, and I've had a relationship with this guy for 10 years. So I think he's great at getting me the best price, and seeing blocks that might come in, getting out of the way and letting it fall a little bit. Then he buys it at a cheaper price for me. That's why they're still there. But most of those traders are brokers. Now, the exception is the options pits at the CME. They have corn options, bean options, wheat options, all that kind of stuff. You kind of smile and it's like, oh yeah, I bet they're really no, they actually still trade in those pits. They still have traders and brokers. Most of the other pits around the rest of the world, it's really just like you say, they've negotiated to keep themselves in the mix. So it's not just ceremonial, but there's really not as strong a purpose for them to be there.
Why have some of the commodity pits survive? So things like corn, et cetera, like why are they still not only there, but also active, whereas others have kind of gone the way of more electronic trading?
I think only by mandate. I mean, in other words, if the exchange and the members have a deal where they say, hey, we want, there to always be some open outcry trading on the floor, that's the only reason it still goes on. Everything else can be done on computer. I'm not saying it's better. Having, for instance, as when the crap hit the fan in March, Pomp, and all of a sudden, whether you're trading the S&Ps or whether you're trading in the VIX pit, when things are blowing up, you're better off having everybody getting the information at the same time in the pit than having everybody in offices upstairs and they're all suspicious, because that's what it is. They're all suspicious then. They see an order coming in and they don't know who it is. When it comes in on the floor and they can all see it at the same time, they know that's coming in from JP Morgan. They know that's coming in from BlackRock or whatever. But when it's upstairs, it's silent. It's kind of like, Alien. In space, can anybody hear you scream? I mean, when a trade happens in the ether, there's nothing. There's no information at all. It's just kind of like the trade comes in, people interact with it. You don't know how big it was. You don't know, if it fell into a guy's lap over on, that you think is a great trader or a guy that's a shit trader, and it falls into weak hands. And all of a sudden, the market moves just a little bit and everybody's selling because this guy is scrambling to sell out, rather than if it falls into somebody with strong hands, meaning they've probably got hundreds of millions behind them or whatever, and they hold it for that 10-cent loss, and all of a sudden it click, 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 runs to the upside and they're making dollars. off of this, huge trade they took down, it makes a difference. When you see it in the pit, it makes a difference. When you can't see it, it's just silent. And that's when there's a lack of trust.
Things that I've noticed is people who started out in the pits or got exposed to that world when they were kind of really rocking and rolling, they have a very different understanding of markets and market structure. And it really seems like they had access to and understand the importance of intangible type information, right? So what I mean is, good traders versus bad traders. Who's actually sending in that market order? Who does that person represent from a trading perspective? How much capital is behind them versus not, right? All that type of stuff. And it feels like now that we've kind of gone into this electronic world, the people who have that kind of historical context and information, they actually understand markets better, right? They do have some level of advantage. Do you see the same thing in your experience, or do you feel like maybe that's just coming from somebody who I wasn't around when the pits were really kind of rocking and rolling like that, and so it's more of like a nostalgia thing more so than anything else?
Well, I think it's definitely a skill, pit trading, that's different and doesn't necessarily translate that well to the screen-based trading, because just like you say, if there's a Schwab broker on that side of the pit and TD broker on this side, Merrill and Lehman Brothers back in the day, Bear Stearns, different brokers are representing different paper. So, coming through Schwab, it's retail. It's, even though they might try to mask it occasionally with, a big trader might come in through something that they call a beard, coming through as a retail trade, by the size and how aggressive both the trade and the broker are, that it's something different. So in other words, we all want to trade with somebody who's slower than us, who doesn't have as much access to information. And that differential, Pomp, back in the day was, Grand Canyon, right? Because it really was. It was huge. You would have guys that, had news flows that were faster, guys that, we would get, long before news reading algorithms and things like that, there were people that, got tipped off by somebody when news was about to break, as illegal as that might sound. Now, nobody's faster than the algorithms. The algorithm is going to see keywords that somebody has programmed for their buy and sell programs to react to. And you see it, and it happens like that. There's no way to get in front of it. Everything from the employment data to the ISM to Michigan, consumer confidence, whatever it is. So to your point, there were definitely people that had that edge, whether it was informational edge or whether it was the ability to read, to know the difference between a Schwab order on this side of the pit and an E-Trade order over there, and that JP Morgan order that's coming in for a hedge fund, and you don't want to be on the other side of Bobby Axelrod. So when Bobby's coming in and he wants to buy a lot of something, you don't want to be on that ticket. You want to be the last guy on that ticket. So for instance, that's what Warren Buffett has done forever. Warren Buffett owns General Reinsurance, and General Re is always the last one to write that reinsurance ticket. Everybody else has piled on there, and then the last 200 mil, the last 500 mil, whatever it is Warren Buffett. It's him doing that because everybody else is taking the risk. He gets to look, and if that thing's not getting funded properly, those other guys are screwed. He's not screwed. So anyway, to your point, the democratization that has occurred with information flows over Twitter, which, there's not a lot of things Twitter's good for, quite frankly. But one of the things that Twitter is good for is information that's almost instantaneous. So if you want to see something, if you don't have a high-speed data feed, that costs you $20,000 a month. Twitter's the next best thing. You got to know who to follow and how to get it, but it's there. So if you're looking for certain keywords and things like that, you will find them faster on Twitter than you will doing a Google search or anything else. But do you really want to try to trade against, basically guys that are much, much faster than you? And my answer is no. I want to follow those guys and coattail those guys. That's why Pete and I always call what we do following the smart money. But I don't want to try to compete with those guys. They're always going to be faster than me, unless I want to spend $100,000 a month and then have an IT staff, the size of Goldman's or Virtus or DRW or any of these guys. Unless you can do that, you're not going to be as fast as them.
I think it makes a ton of sense. Help me understand what you guys are doing with Market Rebellion. So you had it up on the Zoom background, and you guys have been talking about it a lot online and everything. What is Market Rebellion, and what are you guys doing with it?
Sure, happy to. We are over at Market Rebellion. We're basically using the same sort of techniques that we used to train people years ago that were our own traders. So in other words, when you came down to the floor, and as I said, if you're a chess grandmaster or if you're a card counter from Vegas and you learn some of the basics of floor trading, you can start to, understand how to make markets. But you still have to be big or at least aggressive. And then you have to know how to lay off risk and all these other things and know how to cut your losses, let the winners run. So we trained hundreds of our own traders over the years. And once they got good enough, they'd always leave. It used to be kind of a joke. They'd say Lincoln freed the slaves. But when you're a trader backing another trader, there's no greater compliment than that trader leaving you and going off on his own or her own, because that means you really trained them. They know what they're doing. And none of us, at least I never did, try to tie anybody up to a contract and say, no, you got to work for me for 3 years. That's crazy. But some people did it. Most of the time, what traders would do when we were training a trader is I would put up the money for you, Pomp, and I'd put up, say, 50 grand. And I'd say, okay, you've been clerking with us. You understand what you're doing. I have confidence in you. Here's 50 grand. Go out there and make us some money. And you'd go into the pit and start trading. And if you started losing money really fast, we'd cut you off. But if, since we trained you, we taught you what to look for and all that kind of stuff, you probably started making money, and all of a sudden I give you more and more money. Now, eventually I've given you $250,000 and you're making money. Once you've made me my $250,000 back, I'm probably on a 60-40 my way split on that. So when you make $200,000, you don't get 200,000. I get 120, you get 80, kind of thing. Once we get to you've paid me my 200 back, now I'm like, okay, Pomp, I'll do a deal with you where it's 60-40 your way. And you're like, okay. And now you're really grinding hard. And then you're making money. And I say, okay, now it's 70-30 your way. And then eventually you leave because you're going to say, I want to make all the money for me. And I'm like, yeah, you should. So you're out there trading when you say, what is Market Rebellion? We took all the same training that we used for our traders, and we basically systematized it, put it online, and people can go through it chapter by chapter and learn, here's how you manage risk, here's how you cut losses, here's how you take profits, because you got to be pulling profits off the table just as aggressively as you're cutting losses. And then here are a bunch of spreads. Here's a bunch of different ways you can make more money than just straight out scalping. So Market Rebellion is our version of what we used to give our traders And we have basic, intermediate, advanced. We've got coaches. We've got mentors. You know, depending on how much time somebody's got, they might just learn at night because, you know, it's just a distance learning product. They can log on anytime they want, watch it for 20 minutes, go put the kids to bed, watch it again, whatever. They've got to pass a test every chapter to get through it. And that's not so we don't get any additional money, but that's to make sure that you know what you think you know before you move on. Because otherwise, you know, you could end up getting in trouble instead of making money.
Yeah, absolutely. And so it feels a lot like, you know, regardless of the assets, trading for the most part, right? A lot of the things you're talking about is very systematic, right? There's things around understanding the market structure, understanding risk, understanding when to take profits off, understanding options, you know, all this type of stuff. And do you feel like investors in general, not just ones who go through market rebellion, but just investors in general are kind of waking up to this world of now there's the ability with everything from fractional shares to zero cost trading, like more and more people are saying, hey, look, I want to go play in the financial markets and there's more access, but they are seeking out that type of education? Or are you still have a fear that there's so many people going into the markets that just don't have the knowledge really necessary to set them up for success?
Well, I see both. And quite frankly, through one of the main things that you kind of identified indirectly, which is Robinhood, you know, one of the free trading places. And, you know, I admit when I first started to see a lot of the flow from the Robinhood type traders, I was somewhat dismissive of it. But especially in light of COVID, I've seen a lot of smart young men and I imagine women that are doing smart trades. And this isn't rocket science. You know, if it was, I wouldn't be doing it. It's trading, like I say, is addictive. It's fun. It's especially fun when you know enough how to not lose a lot, because that's what it's all about. It's not about making a lot. It's about not losing a lot. Because then when you have the experience, just as you know, obviously, now you can lay into bigger and bigger trades and feel more confident about making money. So for instance, Robinhood, well, our business has doubled every month of this COVID. And I say that not because Pete and Jon are so great, and we've got a great staff of men and women that work with us, but literally we have doubled in March, in April, in May, and in June, doubled the size of the business. And I think, Pomp, it's because, you know, I'm not on TV more now than I was then. I'm on less. But I do broadcast a lot. I mean, I put out my own podcasts. I do various, you know, reaches to the public through, you know, Instagram and all the rest. But I don't think that's it. I think that augments it. But I think there's a lot of people that are at home that have time. And an awful lot of them are really well versed in how to use the internet. So Robinhood just being an app, because it's not really a trading platform, it's an app. And again, that's not meant to be derogatory, you know, I'm not meaning to denigrate them when I say that. But when you have a bunch of people that are used to, you know, typing with their thumbs and checking out their phone all the time, and they know how to, you know, follow people on Twitter and on Instagram and on Snapchat and on TikTok even, you know, and they're getting all this information. Many of those things I just named, you can get information damn near instantaneously. And so you've got a guy like Davey Day Trader Global, right? You know, you've got Portnoy. And a lot of these people probably watch him and listen to him, and the guy should be a freaking comedian. I mean, he is. And he's a pretty good trader too, by the way. I'm not just saying that, you know, watching what he does and how he does it, I'd say he's a pretty good little trader. And he's self-taught from what I can tell. And I love the way he goes after Buffett and me probably. I haven't heard that, but I could easily see him. I've got the tie on because I just came off of CNBC, but he hates the suits. He's always talking about, oh, these freaking suits. They think they know everything. What does some 94-year-old guy in Omaha know that I don't know? Nothing. I know numbers. I know, airline seats. I know this. I know that. He's just, I love him. But I think a lot of that entices the folks that are at home and that are watching him, and they're kind of chuckling, but then they're kind of also seeing, wow, he's talking about Carnival and it's up $2 today. That's 20% for a $10 stock or whatever. Wonder if I could make some money trading in Robinhood. So they go in there and, like you say, fractional shares. Oh, you don't have enough for 100 shares? Here's 20 shares. Here's 1 share. And they kind of learn it, and they're getting the hang of it. And, I'm sure there are some spectacular losses because there always are. Like I said, in a professional environment, like down on the trading floor, we would turn over almost a third every year. And most of it isn't people that are leaving because they got rich. They're leaving because they couldn't hack, couldn't take the pressure, couldn't take the losses, lost a backer, whatever it might be. They couldn't do it. So to think that you probably have about the same from people at home gamers, as we call them, people that are trying to trade and make a living. But it's also one of the things that I've observed forever, Pomp, is that if I want to make, 100 grand a year, 200 grand a year, I could do it falling out of bed because I've done it for a while. So it's not hard, and think about that. If I want to make 200 grand a year, there are 256 trading days in a year. So I only have to net, let's say what, $700-800 a day. If you can't do that sitting in front of your computer all day, moving the odds in your favor, you're at a blackjack table. It's the way we always tell our traders. You're at a blackjack table. You don't have to, except you don't have to bet. You don't have to put even, you don't have to ante anything. You can just sit there and say, I'm waiting. And all of a sudden, you've been counting the shoe, and the dealer's got a bunch of face cards in there. And you're like, okay, I'm in. Buying 500 shares of Carnival. I'm buying 500 shares of Apple. I'm buying 1,000 shares of Facebook, whatever it is. And all of a sudden, those things, because of the setup you think you saw that is actually working now, all of a sudden that 1,000 shares of Facebook moves 1.5 points. You just made $1,500. So now the deal is, are you smart enough or are you too greedy? You only needed to make 700 a day to get to your 200,000, $250,000 goal. So take that freaking money off the table, or at least take most of it off the table. Carnival's starting to move for you or against you. Cut it or add to it or whatever. But again, keep in mind, you were there to make your your 700 or $1,000. You don't have to push it to 3,000 or 4,000. If you can do that, you're talking about 600,000, 800,000 a year. But if your goal was 200 and now you're pushing it, and maybe you're out on the ragged edge because you're leveraged, you're in margin, and God knows in your world, Pomp, you could be, getting 50-to-1 leverage on, various digital assets and on the options on those digital assets, which is, risk on crack. You could do all that, but is that the right thing? In other words, I think there are plenty of people who can do it, and there's a lot of people who get enticed into or fool themselves into thinking, yeah, I'm Davey Day Trader Global, 5,000 a day. If I do 5,000 a day, I'm making $1 million a year. And all of a sudden, the market reverses, and they're sitting there and they're going, oh my God, I was up 1,500 and I pushed for 5, and now I'm down 3,000. That means I've got to make, 4 days worth of 700 just to get back to break even. As long as they're disciplined, they can win in this game. but there will be a lot of them that will lose because they don't have the discipline.
I think it's a great way to look at it. It's just breaking it down into kind of day by day. And again, going back to kind of how we started the conversation about just showing up every day, right? In and out and understanding and believing in and enjoying that process. You and your brother and a number of people around you have become very big, or maybe not big, but have become more excited about Bitcoin and digital assets and have started to actually make investments in the space. So maybe just talk us through kind of how you guys evaluate Bitcoin and the crypto markets in light of kind of the rest of your portfolio, and then what you guys have done in the crypto space.
Sure. Well, I've probably got somewhere between, and on a monthly basis, because I don't trade that often. I'm not like in and out during the day like you, Pomp. But on a monthly basis, I probably have between 5 and 10% in digital assets. And almost all of it's Bitcoin. A little Ethereum, but mostly Bitcoin. I've got a little Litecoin, a little Stellar, but really I'm about Bitcoin. And I'm there because guys like yourself, guys like Peter Brigger over at Fortress, who really got me, psyched about it. Max Kaiser always likes to tell me, oh yeah, I told Jon to buy it. I love you, Max, but I don't remember you telling me to buy it when it was freaking 40. You probably told a bunch of people, but you didn't tell me. I would have loved it if you did. But I love Max. I mean, he's a funny dude, and he, randomly, Pomp, he will put out a tweet that says, I told all these guys, and he'll list like 10 of us, to buy Bitcoin at $40 or whatever. And I'm like, okay, whatever. I wish you did, because if you did, I'd be richer. But I first got involved at about 300, realized I didn't know what the hell I was doing in it. Didn't get involved again until it was closer to 1,700. So I missed an awful lot of that. And I didn't sell when it got over 18 or 19,000. I didn't liquidate. I would have looked like a genius if I did, but then we all would. Right now, Pete and I put an investment down on Voyager, a crypto broker run by a friend of ours, Steve Ehrlich. And there were a bunch of smart investors that got into this latest round too. So I wanted to get in because I think these other investors are smart. I think Steve is building the business in a good way. And, I've met so many. So for instance, I know a lady that runs the Winklevoss family office. Great lady, smart woman, Stanford grad. I think she's a chaos mathematician. I think what the Winklevi did, buying into Bitcoin in a big way, and getting involved in the space, creating Gemini and all that. This is all good stuff for the space, the way I look at it. Novogratz, Peter Brigger, and these guys, Fortress, Pantera, all of these different groups that have come in bigger and bigger ways. I don't think they've wrecked it. I think they've made it better. And I think that it's still just got a foothold that's this big compared to everything else, compared to gold, compared to stocks, compared to futures. But I think that people will, and again, nothing better than COVID, Pomp, for people to realize, now it hasn't hurt the dollar yet, but eventually what we're doing, printing money, is going to hurt the dollar. And it's going to hurt my kids. It's going to hurt, for years out into the future, all this printing of additional capital. And that's what I love about digital assets like Bitcoin. I love that it would really have to be a mutually assured destruction for us to have more Bitcoins than Satoshi Nakamoto, Satoshi, and whoever that group or that whatever is, had created as the top level of the amount of Bitcoins out there, you know, it would take a majority of us that own coins to say, yeah, let's make more. And I don't think that's in the cards.
For sure. And I guess part of this, and what's really interesting is we kind of have two forces at work here, right? You have kind of the bullishness and the market growth and the innovation that's happening in Bitcoin and the crypto markets. And that by itself, I think gets, you know, a good amount of people excited. But then you bring up the other point, which is, and then you have the traditional world absolutely in chaos, right? And yes, the stock market's hitting all-time highs, and yeah, there's people who basically saying, hey, look, I know the world is basically burning, but I'm making money, right? So there's kind of this cognitive dissonance, if you will. But at the same time, it's only going up, right? As Portnoy would say, because of the structural thing of we're just injecting trillions of dollars into the market. So of course you're going to get the inflation of asset prices. Do you feel like the damage to the dollar, is that more something short-term you're worried about, medium-term, long-term? Like, how do you think about when that damage actually kind of comes? And then it sounds like you're of the belief that Bitcoin would be kind of a beneficiary of some of that kind of collateral damage to some degree.
Yeah. Well, and you'd be much more eloquent speaker about the topic. But here's some of the things that I've heard from folks like you and from you that I think play into that. So longer term, yes, I think it does impact the dollar, not in the short term. Short term, we're a safe haven, just like Japan is a safe haven. Japan still prints more money than we do, you know, borrows a ton, and yet people haven't abandoned their currency. It's just the opposite, because such a country of savers and so forth. I think one of the things that probably hits Bitcoin in a positive way, Pomp, beyond, you know, that we're printing money and it's making other currencies worth less, again, like Buffett says, not worthless, worth less, is that I think we're likely to see people get frustrated by things, you know, could be Biden supporters, could be Trump supporters, it could be BLM, it could be a whole bunch of things that have caused people to say, you know what, I don't know if I want, especially like here in Chicago. Where are you right now, Pomp? Are you in New York?
I am, yep, in New York.
Okay, so New York and Chicago, they burned our cities. And they, you know, I'm not blaming the cops, but I'm saying the cops were told to stand down, I believe, in both cities. And then they burned up and down Lexington and Madison, and they were obviously down on Fifth Avenue and destroying things in New York, where I love to spend time, destroying things here in Chicago, up and down Michigan Avenue. And we know that wasn't the, you know, peaceful protesters. That was more or less career criminals that just used it as cover for them to do what they do. But I think it woke a lot of people up, and a lot of people realized that there's going to be a lot of stress on the system, and maybe they want to get somewhere other than where we are. And the most portable wealth on the planet is Bitcoin. It is the most portable because all you'd have to do is have it up here. You don't have to, back in the day before there was Bitcoin, Pomp, it would be, I'd hear this from my friends in Israel, or I'd hear it from friends in the Middle East, and they'd tell me, I bought a bunch of American Express traveler's checks, remembered the serial number on the first and the last, and I burned them. Burned them. Why? Because now I can go anywhere and then walk into the American Express office in Geneva, Switzerland, and say, here's my American Express traveler's checks. Here's the first, here's the last. You know, they got destroyed. Give me my money. And they would. But you're giving up, you know, 3% or 4% to do that trade. And meanwhile, in Bitcoin, you can be jumping back and forth from Bitcoin to stable coin and doing all kinds of things while you're trading these other currencies and jumping back and forth into a stable coin or whatever without even taking the market risk of the Bitcoin, and move anywhere you want with your money, with your wealth. And that I view as a constant demand feature. The more people that figure that out, and I know you and everybody who's been a long time Bitcoin or digital asset proponent, they have said forever, yeah, how do you take my Bitcoin? You can't take but you can screw with my bank account. You can basically put an exit tax on me if I want to leave America or, leave the country and give up my citizenship and go over to Switzerland or go to Italy or go to wherever. But if you have Bitcoin, they can't do that. I mean, you could literally go anywhere on the planet. No, I'm not saying that there's lots of places better than America, but I'm saying it's a nice insurance policy to have something that is portable wealth. And it doesn't have to be like when my great-grandfather came here because of a genocide of Armenians, Pomp. He came here with bags filled with gold. He wasn't that rich, but, obviously gold back then versus what it is now, he would have been crazy rich because gold wasn't $1,700 or $1,800 an ounce. But he had literally bags of gold, heavy to transport, pretty significant risk of theft and all the rest. Meanwhile, Bitcoin, nobody knows you have it. I loved when I would travel back and forth in Europe over the last couple of years, and I'd be at the border and the guy would say, anything to declare, over 10,000 in currency or whatever. And I'm like, nope. And yet you got whatever. I mean, could be tens of millions of dollars in Bitcoin and nobody's the wiser.
Just words in your brain. That's how it works.
Yep.
One of the things is it feels like Wall Street's waking up to a lot of this, right? And so there's the kind of qualitative argument, how I describe why Bitcoin's important. You just did a great job of articulating it, and you don't give yourself enough credit for understanding kind of the intricacies of it. But then there's also more and more investors who seem to say, hey, look, wait a second, this is a tradable asset as well. So we've seen, Renaissance Technologies obviously put in one of their filings that they're now looking at Bitcoin. I can't actually remember if it was spot trading or kind of options type trading. We've seen Paul Tudor Jones come out and say he's put about 2% of his portfolio into Bitcoin. And so we're kind of like now, okay, there's more kind of cover your ass going on, right? There's more people with big names and great track records that are starting to actually get exposure to Bitcoin. Do you think that really wakes up Wall Street and we're going to see this like massive capital inflow? Or do you think it's still something that just slowly but surely over time, more and more people will opt into it? It's just going to take, 3, 4, 5 years to happen.
And I don't have that crystal ball, Pomp, so I don't know. But I do know that all those people you named, as well as a friend of mine, Mark Lazary. Mark is a distressed asset buyer. That's what he does. So he finds distressed assets and buys them. Now, he's not saying that Bitcoin is a distressed asset. He's saying, I think he said 2 to 5% of his net worth, and it's in the billions, into digital assets, Bitcoin being the most prominent, I think. And I think you'll see more and more of those folks doing that. I mean, I got to believe John Paulson, who was such a proponent of gold and, famously caught the financial crisis and got on the right side of that. And then he got into gold. And since then, he's kind of, he said, now I'm shutting it down. I'm just going to run my family office. I guarantee you he gets into Bitcoin if he isn't already. But I think a lot of them will want to keep it quiet as they're getting in because, they'll run it. I don't mean that they'll run it in terms of how it operates. I mean, they'll push the price too far, too fast. So for the exact same guys that know that you don't want Goldman knowing that you're buying, FireEye or Uber or Microsoft because they'll run it ahead of you. Those same guys are sitting there thinking, I really like this play in Bitcoin here, but I'm not going to say a lot about it until I got enough of this stuff because, you know, we both know that blocks of it stand out. And so they've got to stay under the radar with these accumulations. And forever I had Pomp guys coming to me. 2 years ago, I probably had 5 to 10 calls a week from people telling me, oh, I want to buy 200 million in Bitcoin. And I'd say, no, you don't. And they'd say, oh, yeah, I do. I'll give you proof of funds and all that. And as soon as I'd ask for it, then they didn't have it. You know, same old crap. And it was when Bitcoin was falling from 18 on down to 35 or 3,200, whatever. And it seemed like more than anything, they were trying to hold the price level by telling people like me that they had it to buy. So I would go to people, and then these, you know, that had large quantities, and these people would say, okay, give me proof of funds. I'll do 50 million, or I'll do 100 million with them, and blah, blah, blah. And these were at $4,000 and $5,000 per Bitcoin, USD to Bitcoin. And I did, I think, 2 transactions out of at least 100. And most of them were complete BS. And I think they were just trying to, you know, manipulate the market or whatever. But same is true when it's, you know, stabilized and hanging near 10,000 now, that people are probably not wanting to see it jump to 12 and 15 and 20 again too fast, because they're going to try to accumulate it at a level.
I think that's exactly what's happening. You understand that the people who want to buy a lot don't want the price to go up, right?
No.
And I think that's what we're seeing. Before I wrap up, I always ask people the same 2 questions, and then you're going to get to ask me one to finish it. The first is, what is the most important book that you've ever read?
That is a tough one. One of the most important would be Ayn Rand. And I don't mean the Fountainhead, but John Galt, I just love, you know, I know not everybody's a big fan of libertarianism, and you can be, you know, I know Alan Greenspan was, and Atlas Shrugged is one of, you know, those books that sort of changed my outlook. I mean, for a long time, Pomp, I would start the book and couldn't finish it. And some of that is because I'm dyslexic, so I don't enjoy reading, but I enjoy books. So now all I do, as far as books, I read newspapers because, you know, I have to, or, you know, online stuff because I have to. But as far as a book, now I listen to them all on tape. So I love it because I can do it when I'm walking, when I'm working out, when I'm flying in a plane, you know, driving a long drive or whatever. I love it. So that was my best way to get through Atlas Shrugged, because it is, you know, a lot to get through. But I loved a lot of what she wrote, and how passionate she was about it, and that Greenspan was such a big fan. And then after going through it twice now, I'd say that's probably the book for me that I would say.
That's a great answer, and I'm a almost 100% audiobooks as well. So I'm there with you. The second question is more fun. Aliens, believer or non-believer?
Believer.
Why?
So I believed that I saw some activity that I could not describe any other way except to say it was alien. Because I was coming out of an artist studio in college, and because a girl was screaming outside. So I was coming to her rescue, being a gallant young lad. So I came out, and she's pointing up in the sky like this, and it was about 2 a.m. Nobody else was around. And I looked up at what she was pointing at, and it was, as many have said, a cigar-shaped object that was lit up, and I couldn't tell how far away it was. And I'm sitting there looking at it going, what in the hell is that? And we're both just staring at it. She wasn't screaming anymore. And I said, how long's it been there? And she said, it's been there for like 3 or 4 minutes. It's just sitting there. And it appeared to be over a building that was about maybe 1/8 of a mile to 1/4 of a mile away, not too far. And we couldn't tell how big it was from that distance, but it had a steady glow, not lights going around it or anything, just a steady glow, and wasn't a balloon or anything else. It stayed at that exact spot. And then all of a sudden, Pomp, it just went, like back and forth like this, and then boom, straight up and gone. And so we were both just, what the hell was that? Now, flash forward to a Joe Rogan podcast. Not as popular as Pomp, but, right up there. So I'm listening to this Navy pilot talk about seeing the same tic-tac shaped thing, cigar, tic-tac, whatever, out over the ocean about, I think, 400 or 500 miles off the coast of California. And he's talking about, he's pinging it on radar and it's not there. And his co-pilot, the guy behind him, the weapons officer or whatever behind him's going, I got nothing on it, Skipper. And he says, all of a sudden then it starts jamming them. And he said in the Rogan podcast, I believe, he said, jamming us is an act of war. He said, if you're jamming, our planes when they're out there to defend an aircraft carrier, because it's just a routine trip that he is out there. And he says, if you're actively jamming us, he said, that's an act of war. So he says, we go close to this thing now, because he said, I'm, thousands of feet above it at this point. But he said, we go right down at it. And he said, it is down on the water, just above the water, and there's something beneath the water that he says looks like it might be controlling it or something. And it's a big thing, like the size of a submarine or bigger under the water. And all of a sudden, this little tic-tacky thing that he's got video of it, but he's got no radar back from it. It's being blocked or absorbed or whatever. All of a sudden, he says, this thing just goes at not the speed of light, but faster than anything. He says that any object that we know that can fly cannot move this fast. And he said it just goes straight up and gone. And he and the co-pilot are just like, what the hell was that? And he gets back to the ship and they say, you were chasing UFOs again, huh, Captain? And he goes, yep. And they go, you see any? And he throws them the VHS tape and he goes, you tell me. And the Navy has released that tape. And
it's scary. It is scary.
Yeah, there is something out there, my friend.
Listen, I'm a believer. I don't know if they've come here, if they're not, but there's things that we can't explain, and the math suggests that that they're out there somewhere.
Yeah. Well, so then my question to you would be, have you seen them?
No, so I've never seen aliens. The reason why I asked the question is
again, by the way, I haven't seen aliens.
Yeah,
I've seen what I think is evidence of a ship or a vehicle of some sort, but I can't explain how it got there or how it moves.
Yeah, and the reason actually why I came up with the question, this is now almost 2 years ago, was I was laying in bed one day and I literally was thinking, do aliens have pets? Which is a weird question to think about. But if you think if somebody came here, they'd be like, wait a second. So the big animals have smaller animals on leashes and that live with them, right? And kind of all this stuff. And like, we just think of them as pets. But does that mean that there's like a multi-species alien, kind of civilization out there? And they've literally, some of the aliens are kind of in charge or more intelligent, and they've got pets of, other things. Started just thinking about that. Like, we have no clue. We literally have no clue. And so you just you could get lost thinking about all this stuff. And one of it is just fun, right? Two is it's kind of this intellectual curiosity exercise. But it just does feel like we'd be pretty selfish to think that we're here alone.
Yeah. And the more you see, again, credible people like that Navy pilot, he's got a lot more credibility than me. And he's seen a lot of weird stuff, I'm sure. When you're up in the atmosphere as often as those guys are, just like some of the astronauts are now admitting that they've seen stuff up there. There's stuff you just can't explain. Now, could there be another explanation for it? Yep. But to see it that close and to see them move that fast without a sound, again, and he said they were putting it, even that pilot was saying, we had it on infrared, nothing. There's no exhaust plume. There's nothing coming off of this thing. And he's like, how the hell is it moving?
It's crazy.
Yeah.
Absolutely nuts. Jon, where can people find you on the internet, and where can they find Market Rebellion?
So you can go to marketrebellion.com. And it's just like the name sounds, marketrebellion.com/get started. That's all of our educational stuff. And if they want to follow me on Twitter, just at JonNajarian, just at Jon Najarian.
You're a legend, my friend. Thank you so
you
much.
Are. Thank you, Paul.
Yeah, listen, thank you for doing this. I think that, people get to see you on TV every day and kind of see everything that you're talking about. So it's awesome to kind of hear your thoughts both about, your background and story, but also how you look at Bitcoin and digital assets. So thank you so much for taking the time to do this.
Thanks very much, Pomp. I appreciate the offer.
For sure.